And the consumer use of buy now, pay later continues to grow, becoming more like credit cards used for expensive purchases over longer periods with higher interest rates. Klarna, which is a major player in that space, has recently revived its IPO plans, aiming to expand beyond its initial offerings. Joining us right now is an analyst who covers that sector closely, Moshe Orenbuch, TD Cowen, senior analyst covering specialty finance. Good morning to you. Buy now, pay later has become sort of the phenomenon of the credit world. The question, of course, is does it effectively push out the credit card industry, or is it just sit side by side?
Well, I think it pushes out portions of the credit card industry. Buy now, pay later was kind of created for people who either didn't want to use credit cards or didn't have a lot of open to buy on their credit cards.
And so if you were to look at the winners long term, who are the winners? And by the way, who loses? Because it sounds like if you are saying it's going to take some significant share from the credit card industry, that's pretty interesting.
Well, you got to put it in context. Right now, there's almost $100 billion of spending that goes on buy now, pay later type programs in the U.S. But the amount of debt that's actually outstanding is a small fraction of that, because most of it is pretty short term. And so, it's getting larger relative to the volume, but it's not as large relative to the debt. So, but I think you would say, it is replacing credit cards. For the moment, a lot of that is usage of people, from people who really don't have a lot of open to buy on credit cards. The U.S. is a credit card market that is pretty rich with rewards for folks that have, good credit scores and incomes and large credit limits. And that's not really what buy now, pay later is designed for. It's designed for people who, are not quite in that level. Might be, kind of a mid-prime credit score or that type of thing, and not as much open to buy on their credit cards.
Are you a long-term believer that the credit card companies are effectively a short? And the reason I ask that is, we have, the Circle, we have the stablecoin guys come in, we have everybody talking about sort of remaking finance. And if finance is truly remade the way people describe, all of these fees should go down to next to nothing.
Yeah, Andrew, I've been doing this for 35 years, and we've had that discussion for most of that time. So I would just say, the fees paid to the merchant basically go to subsidize the cost of providing credit, which includes the rewards. If the merchants really want to remake it, they've got to kind of redo that process. This is something that's been tried many times. So far, it's failed. And so I would say, to the short answer to your question is no, I don't believe they're shorts. I'd ask you to kind of look back at how many times we could have had that discussion over the last 20 years.
Right. Okay. Your top 3 picks on the upside, and what would you run from right now?
So we like, on the card side, Synchrony and Cap One, kind of equally here for different reasons, as well as what I co-cover with my partner, Brian Bergen, Visa and MasterCard. We are neutral on American Express. I wouldn't say we run from it. I think in the current environment, it's just a little tougher. They benefit most when there is a lot of incremental spending. And at the moment, it looks like that's moving more sideways than not. And there's, a fair amount of competition kind of for the high-end consumer at the moment.
Okay, what about the buy now, pay later folks?
Right. We do have a buy. We have a buy on Affirm. That's the only publicly traded one that we cover right now. And we do like that quite a bit. So, it's a touch more expensive now. We launched on it. The stock was under 50, and now it's in the 70s. So it is. We have a buy on it as well.
Moshe, I want to thank you for joining us. Folks who want to buy that, they can buy it, but they can't pay later. They got to pay right now.
That is true.
That is a little bit of the thing. Yeah.
Thanks, Andrew.